Good morning, everyone. My name's Doc, and welcome back to the channel. Today, I have the pleasure of speaking with trader Motif. You guys may know him, formerly known as altcoin Pepe. Motif is a guy who I've been following for over a year now. One of the guys that I think dominated the market in 2022. So it's a real honor to have him on. Currently, he's building these absolutely sick indicators. He has a whole suite of indicators that he's building. You guys may have seen them floating around. I think they're absolutely gorgeous, by the way. And he's a guy that I actually reached out to earlier this year when I was having a little bit of struggle with work-life balance. He had a little bit of a thread that went viral on CT that I resonated with, and I got to DM him on that, and he reached out and gave me a lot of really good advice. So thank you, Motif, for being on today. Real pleasure.
No worries. Thanks for having me, mate.
Yeah, of course. We could start off. Let me actually add your screen here. Perfect. Those are those absolutely beautiful indicators that I was talking about. Funny, right before I had you on, I was like, man, I don't even know if I know how to pronounce Motif. I keep saying it.
Yeah, you're doing it the right way.
And see. Yeah, I was like, let me Google it and see if there's a pronunciation. And there's an actual definition for your name that I thought it was so cool. It was like, what is it? A reoccurring idea in artistic work. Is that right?
Correct. Yeah.
Yeah. Where'd you get the idea from? It's got to be something trading related, isn't it?
Well, I was altcoin Pepe at first, and it's sort of a meme name for the bull market. And it's a name taken from somewhere else, Pepe. It's like a meme within the crypto space. So I wanted something unique, and I thought I trade patterns basically within the market. Repeatable patterns is what I really trade. That's what I'd say good at. So I come up with Motif after searching for a little while. I come up with the name Motif, and it sort of stuck, and that was pretty much it, really. Just as my personal brand, that's basically why I come up with that name. Yeah.
Yeah, I mean, it's really cool because, like, as traders, we really do just, I think a lot of people think we're out here doing 50 different things. We're doing all this type of flashy stuff, but it's like a hit and trial thing. And eventually you find a rhythm with the market. You find something that you're good at. You find something that's quick and easy and clicks, and you just hit that same button a million times. You're just hitting the same repeatable play like a million times. I think Trader Magus had a really, really good tweet recently. It was like, he's waiting for someone to screw up. He exploits that, and that's it. And he's done for the day. Right. So he's just hitting that same button. I think a lot of us are doing the same thing in our own way. And it's really cool. You kind of found something that represents that to name yourself after.
Yeah, look, I like to trade with a simple approach, and that's how I traded in 2022. It's how I traded in 2021, really, with the bull market. But I really didn't know what I was doing in 2021. I think anyone could have longed absolutely anything. It would have gone up. The issue was knowing when to take profit. And so that's why I spent the last 6 months of 2021 actually creating a new system that would get me out of the market at the right time, so I wouldn't take those big losses. And that's where these simple systems came in. That's where I developed the indicators. And that's the reason why I did develop them. So it would take a little bit of the emotional, just the emotion away from the trading decisions that I was making. That's pretty much where the ideas come from.
Yeah, I've heard you say that before, that, you had a good year in 2020, or excuse me, in 2021, but you had bad moments in that year too. And 2022 really was your home run year. Is that right?
Correct. Yeah. 2022 was, I made more money in 2022 than I did in 2021.
Yeah. I think it's funny that you're saying that, because there's not many people who I agree with that. I think I was the exact same way, because in 2021, I was the same thing. I let the bull market dictate everything that I did. And I got wrecked May 2021. That May crash, like, I didn't see it coming. I didn't know what to expect. On the way down, I was like, oh, okay, I'm finally getting an opportunity to buy some Bitcoin. I tried buying some spot. I got wrecked there too. you know, the second time around, the second bubble was much better for me. But then again, I got wrecked December like 4th, 2021. And it was that moment that I was like, dude, I need to stop allowing the market to dictate my moves. I need to take the controls for myself. And that's where my, you know, trading journey, quote unquote, began. I was,
Yeah.
you know, wondering, was it May 21 for you as well? Or was it the
Oh
later
yeah.
one?
Yeah. I think a lot of people know this story as well. It's actually funny now looking back, but yeah. So I'm showing you the chart here because this is Rune, which I bought down here. And again, it was
Wow.
pure luck, really. I was using TA, and you can see this on Twitter, this actual trade. And I think I reposted it around about $11. And it continued to go up. And I think around this point here is when Bitcoin dumped. But Rune was holding up. Now, me, being the amateur that I was, put a post on Twitter as well. It might still be there. It should still be there because I don't really delete tweets or anything. And it was a real cocky post that I put up. And I said, Bitcoin's dumping. I've now moved all my money into Rune. Because it was looking like this. And at the time, you know, I didn't really know what I was doing. I knew what I was doing in terms of trading. I knew how to trade and everything like that. I traded Forex for many years before that. But I'd never traded a market like crypto. So I didn't quite understand the dynamics of it. And as I put my money in at this point, the next day, I think it dumped around about 60% from the high, 70%.
Insane.
And when it closed, it was around about 50%, and I closed all my trades and took a 50% loss on all the gains I'd made in the bull market.
Yeah.
In this one trade in one day. And that was the point, that was the moment at which I was like, right, I need to sort this out because I'm not letting this happen ever again. And I spent pretty much the next 6 months trying to figure it out, where I was going wrong, what I was doing right as well, because I was doing a lot of things right, but it was taking profit was letting me down. And so this one candle right here is what led me to creating all of this.
And I'm guessing you've never experienced another 50% haircut on your net worth again.
Nope. And I never want to experience it again. It's not fun.
You know, one thing that I'm curious about is when you were sitting there and you're in that 50% drawdown, what was going through your mind? Were you like, I need to make this back immediately? Or did you get extremely risk adverse where you're like, I need to protect this 50% so that, you know, you weren't taking the risk when it was, you know, presented to yourself? Because I think that's a big problem that a lot of people face is when they lose a bunch of money, they're unwilling to use that money. They become overprotective. And I think the other half of people just say, oh, I need to YOLO this other 50% to make it all back in one trade. What side were you on?
Well, first of all, I was thinking what
Or
I'm going
did
to
you
tell the
experience either?
missus. So I was thinking what am I going to tell the missus? How am I going to tell her that I've just lost half of our money, basically? So that was the first thing. But the something I like to mention is I actually called for, when the market was around here, I actually called for this level. If we saw a close through this level, the market would dump and go sideways for months and then down. So I actually did call this exact thing. I didn't expect this. This was unexpected completely. I thought the market was done here and it would continue going down. So this I did not expect. But as soon as it got back below through here, I think at that point it's game over. But through here, I was anticipating that if 47K, which is around this point, was broken, then we go lower. And I totally ignored it. And so when I lost all my money in Rune, and then I exited the markets, I didn't really do much after that for a long time, for at least a month or two. I think I was trading in and out of a few coins, but I sort of took a break. I didn't revenge trade. I didn't try and chase the market or anything like that. I wasn't buying dips. So I took a break. And that's really when everything started for me, started to change and started to look, because I had a really good system. It was very, very simple. It's quite similar to XOs where you use the 2 moving averages and you're basically using, I I don't know if XO uses this, but I use a deviation type of strategy. Deviations are everything for my systems because it really paints a story of what's going on. So I tend to use the deviation below, get back above, and then that's sort of the reclaim.
Yep.
But in the bull market, I was basically buying anytime price came back into those moving averages because that's back to the mean essentially. And I was thinking that in a bull market is a bargain. People let's call it discount. That you have discount and premium.
Right.
So anything that was back towards the mean was a discount zone for me. So any dip I was trying to buy up. But there comes a time when those dips no longer work and you start really giving all your money back. And so that's what I really needed to figure out. And in terms of market structure as well. So if we go into the weekly here, just quickly, you'll see up at the high here, after this huge move up in the bull market, this was the first time that we broke structure. Didn't realize that until after the fact. But once I saw that, that's when I started to really dive into structure and how it works on a higher time frame, how we can pinpoint getting out of the market quicker. You don't have to get out at the top, but as long as it's going to get you out at a reasonable price relative to where you bought, then that's good enough for me. And this is why I developed this system. It's very, very similar to the system that I was using in 2022.
Nice. Yeah, I think I actually share a similar thing. I think what you're using right there is like the 1221 EMA. Is that right? Or maybe the 2021, right?
I think it's the 24 on this one. Yeah.
Okay. Yeah. I use the 100-day, 200-day EMA. And I think that comes out to the exact same thing on the weekly, because math, right? So, but yeah, I use that as my like cyclical bias, and I actually use those on the 4-hour as well. And then some on, lower time frames. But yeah, I think people misunderstand because, people say EMAs are these, meme averages or whatever. But the idea is not, hey, I'm just going to buy every time it tags this. It's just to understand, who's in control of the market. Because as you have, there, you can see the downtrend from like 3AC, from Luna, and all those pump fakes, right, that we had last
this
summer,
one here.
rally. Right. We had the merge rally below, and then we had one more before FTX. And you could see how that completely shifted in 2023. Right. And I think one of my favorite things XO says, or he said it last year, he's like, you guys all got out traded by some boomer EMAs. And it couldn't be more true because, people are so psyopsed at highs, at lows, at this, and they can't understand that the simple market structure, whether using market structure, whether using EMAs, can really carry you pretty far. As far as like, a high time frame bias.
Yeah, Trader XO was the one who introduced me to the EMA system. Basically, it's 12 and 24. I think it's 12 and 21. Very similar. There's not much difference. But he essentially introduced me to that, and there's a lot that goes on with moving averages that doesn't quite meet the eye when you first look at them. There's a lot that they're telling you, like this, for example, right here. Is something I'm looking at on the monthly chart. So if I go to the monthly chart on Bitcoin now, it'd be better if I use the Coinbase one. Let's go on Coinbase. If you look at the moving averages in a bull market, or even in a bull range, the fast one is above the slow one. So that for me is an immediate sort of sign that we can accumulate this asset. Whereas when it's like this and the fast one's below the slow one, I'm a little bit cautious. And this is what I've been sort of talking about lately. Now, it's not exactly bearish. We're in a bull structure, as you can see. But the formation of the MAs right here is just keeping me out of the market for now. I want to see something like this.
Yeah.
And what you want to see is the trajectory going up, as XO says, and then the expansion between the two. So the fast one moves away from the slow one. That's when we're in a really strong trend. And it's only when they start to become really tight is when we get these larger sort of moves.
Yeah. And
when it sort of contracts, that's when you get that contraction, and then you get a large breakout in whatever direction. But for now, this is sort of, I'm looking at this in a similar manner. They're contracting right now. I do think we're in for a large move, but it does look like lower down to me, just looking at this. And so that's
Yeah,
the way I use them, and that's why I create a system around them. I don't necessarily buy at the EMA anymore. I use a lot more than just that, but it sort of maps the market out for me.
so so would you say that you're more of purely systematic trader at this point, where you're relying on the data to guide you versus the noise and the ETF filings and whatever else, maybe recession fears? Is it more strictly like I want to ignore that and focus on the data in front of me and trust the system over a long period of time?
Yeah, I'm not really well versed in all of that. I'm happy to say that I know my strengths and I know my weaknesses, and understanding the macro part of it, I understand enough, but I'm not an expert by any means. So
Mhm.
for me, I think the chart tells you everything.
Yep,
Um,
I agree with that.
that's what I primarily use. Very rarely will I look at news or anything like that. If I'm trading intraday, Euro USD, for example, or even Bitcoin, and I know there's a news event coming up, I will trade around that. But I'm not really paying too much attention to the actual news. I'm watching price, and I'll follow what price does. Essentially, that's what. And at the moment, I am trying to develop more of a systematic approach instead of using discretion. Trying to get away from as much discretion as possible
Hmm.
and just using more of a systematic approach. If the indicator tells me to buy, I'll buy, but I'll set some boundaries around that. I'll know where I'm getting in, where I'm getting out, where I'm wrong, and then I can trail the stop loss up, for example, if I need to. Really coming up with a more of a robust system that can trade within any sort of market condition without me trying to put my thoughts onto the market. That's really, and that's why you've not really seen a lot of predictive tweets from me lately. I used to put a lot out, like I think the market's going to go up, take a high, get back below, we can short it here.
Right.
I'm not trying to do that anymore. I'm trying to I'll mark out, say a high, and then I'll wait and see what happens at that high. If
Right.
I was to do this, for example, on Twitter, and then say, well, if it gets back below, I'm going to short here, I'm sort of trapped into a bias there. I don't want to do that. So I will
Mhm.
basically map out 5 different scenarios, and whichever one comes off or gives me a trigger, that's the scenario that I'm going to take. So I'm trying to move into that direction more.
I mean, I think that's very well put, especially that part where you said, I'd be locked into a bias. And me being someone who just for no reason got some followers this year, and the Discord grew and everything, people start valuing my opinion. I've been very cognizant of that recently too. Is that if someone asks me my opinion on something, it does end up leading my bias because I'm like, oh, I put this out there. Do I still believe it the next day? Do I believe it the next day after that? And I think what's helped me, I don't know about you, but is I just wipe my charts like at the end of every day or every 2 days. And I'm like, do I still believe that thing that I said yesterday? Is that still how it's
Yeah,
forming? Because if I get locked into that bias, like you said, like if I'm looking for, a swing high to get run and then short underneath it, and when that move comes, I hope that I'm not letting that bias control me because something else could pop up that I'm willfully ignoring when the time comes. I think that's a very wise thing that you said there. I didn't want that part to go unnoticed.
yeah,
Uh,
yeah.
one thing I wanted to ask you, we had this kind of, we shared this kind of thing where one time, I forget how you said it, but I'm going to use my words here. And it was kind of the second simplicity of trading, where when you come into trading, you develop a very simple system. Now, whether that's like smart money concepts, ICT trading, liquidity, range bound trading, EMAs, trend trading, everyone's got their own thing. Some people use Elliott wave, some people use order flow, and we get this moment where we're in our development where you're like, oh, that's going well. That's going well. And then you get excited like a kid in the playground. You're like, oh, I've already played basketball. Let me go play soccer. Let me go play these other things. And you get enticed to say, hey, let me learn about order flow and let me learn about all these other things. And I had this moment earlier in the year, February or March of this year, where I was kind of there. I was like, dude, I'm doing well. Everything's going up. My trading's going really well. Let me see what I can add. And I think you've been down this route too, where you started learning order flow and you were trading on footprint charts. And then you abandoned all that after a while. Could you speak on why you decided to remove that kind of complexity and go back to a second simplicity?
Yeah, I mean, it's a lot to do with health, to be honest with me. The last 2 years have been quite difficult in terms of that. So primarily for health reasons, I was sat at the desk for 12 hours a day
Right. Yeah.
watching the tick charts. It's no fun. Not sleeping right, not eating right,
Yep.
not really moving. And when you're trading with order flow, there's a lot to take in. You have to be on, especially if you're scalping. So scalping, you're in and out within minutes. If you're intraday trading, you can take 2-3 trades a day. So you've still got to watch the market, but you can set alerts. And then your swing trading is so much more relaxed. But what happened with me was late 2021, I actually went full-time trading. And so I had all this time free. And so I'd spend it sat at the charts. And I thought that I had to use that time sitting at the charts and trading constantly throughout the day. But the issue is, what I've found is when you're scalping or intraday trading, you're risking less per trade. Okay. If you're swing trading, I have no issue putting 3, 4, 5% on a trade, on a swing trade. For me to put that amount of risk on when I'm scalping, I'm taking 10 trades or something like that. Or if I'm intraday trading, I might be using 0.5 or 1% per trade. So I've got to take 3 or 4 trades intraday to put on that risk that I'm using for swing trading. So I was looking at it and thinking, there must be an easier way of doing this where I can look after my health. I can feel happier, I suppose, because people glorify trading sometimes, and I just feel like it's not what everyone thinks it is. It's not what it's cracked up to be. It's not. A lot of the times you sat there waiting, doing nothing, and it's not fun. I don't find it fun anyway. I like to be outside doing things. I like to learn, so I like to spend time learning other things. And so yeah, I sort of did get bored, but I had to sort my personal life out as well, and it had to be in line with that. And intraday trading and scalping and things like that just weren't lining with what I valued in life. So that's why now I tend to be more of a swing trader, although I have systems that allow me to get in. So if I, for example, see a key level on the daily chart, I'll set a limit order, and then I'll wait for price to come into that level. And I might jump down onto the 5-minute chart and watch the structure, but I might only be there for about an hour or two. And that's fine for me. I'm not sat there all day long trying to get in and out of every single price movement within the market. So a lot more relaxed. My health's better now. Well, I'll say that it's getting better. I'm not unhealthy by any means. I'm slim, I'm fit, but I have some issues I've had to deal with the last couple of years. So
I don't mean to pry in your business, and especially if you don't want to answer this, but was the health related stuff, is that due to trading? Was it simply due to the lifestyle of trading, lack of sleep, more anxiety, maybe drinking more coffee than you should, that kind of stuff, like
look,
backaches? Was it trading related?
I have no idea what it is. I'm happy to talk about this because I don't think people talk about it enough. So I'm more than happy to talk about it. I basically, late 2021, I was getting a bit of pain in the stomach area. And for those that were following me back then, they know I was running every single day. And one day I went out running and this lump popped out. So I got to the doctor, they say, you've got hernia. So I was like, okay. So I had to wait for surgery for that. And as I was waiting for surgery, I started feeling my body twitching, like my muscles twitching. And I was thinking, that's strange. Went back to the doctor. They'd done a load of tests on me. And I'm thinking I've got something really severe. You know, when your muscle twitches, it's not good. Something's wrong with your nervous system. So I was quite worried. Got my hernia going on. So I was anxious anyway, because I really wanted to get out and run. I was a fitness freak at that time. I was in the gym all the time, eating healthy and everything like that. And at that moment, that was taken away from me because I had a hernia. I couldn't do anything until the surgery. And I thought it was just that. I thought, I'm not using my muscles as much. I'm not moving as much. Maybe there's something going on there. And then I found out I've got Hashimoto's, which is a thyroid condition. It's basically an underactive thyroid.
Mm-hmm.
So I get this diagnosis, and it sort of put me in not a downward spiral, but it really sort of got to me in a negative way. And I just sort of give up on a lot of things and started eating a bit of rubbish. And then I started getting my life back on track, had the surgery and everything, and started taking these tablets. The twitching went away. So I knew it was linked to the thyroid. And then everything was fine. But I've always had this underlying thought that I've got something wrong with my heart. I've always had it because of my family history. Mm-hmm. So my grandfather, I think he was around about 54 when he died of a heart attack. My uncle was around about 52. And my other uncle was 63 when he died of throat cancer. And these were all on my dad's side of the family. So for years, I've wanted to get my heart tested out. And so a couple of months ago, I went and got my heart tested out. Done all these different tests. I actually went in to get tested for clogged arteries. That's what I thought was the issue. You know, the clogged arteries, they get blocked, you have a heart attack, you die. What they found was I was crystal clear on that. And I thought that's because of my diet. I have a very clean diet. However, they found an aneurysm on my heart. That's basically where your blood vessels expand. So the main artery coming out of the top of the heart, which is the aorta, that's expanding gradually over time. And eventually it will become an aneurysm that can rupture at any moment. And if it does, it's highly likely just going to kill you. So that's what I found out 2 months ago. So I've now got to deal with that. In terms of whether they're related to trading, I think the aneurysm is, probably hereditary. I'm not too sure. In terms of Hashimoto's, maybe the lack of sleep over the years. I've been doing this 8 years now. And the first 5 years, I was not getting any sleep. Especially during the bull market, I was up at all stupid hours of the night. Sometimes I'd sleep in the day. It was all over the place. I wasn't moving as much. And especially when you're learning something as well, I'd spend 18 hours. I'd wake up at 6 a.m., get on the computer, and then go bed at 12 a.m. at night. So it's maybe that's caused something. Who knows? I'm never going to know what caused my Hashimoto's.
The autoimmune
it's
stuff.
A tough one.
It's kind of tough to deal with. We're not going to be able to pinpoint that or probably blame that on trading, but none of the things that you mentioned probably helped. The lack of mobility, the lack of sleep, all things that I think every trader, myself included, has gone through. Especially when like you said, like in the bull market, when things are moving, you really just get so locked in, right? And even if you have that support team around yourself, like I have a girlfriend who takes really good care of me, reminds me to do stuff, but even then I'm like, listen, like you don't understand, like I have to be here. When you don't, like you can make better decisions, but the market kind of sucks you in. It does this addictive thing where you feel like you have to be there at the desk no matter what. But you said it earlier that you don't. You can be a swing trader. You can develop other systems for yourself. You can play different time frames. You don't have to be there 19 hours a day at the desk. And I think your tweet earlier this year was funny because you're like, you don't want to be that guy that's there 19 hours a day in your boxers. And I'm like, man, that's me. He's talking about
in your underpants, sat there. It's just like a slob. It's not a lifestyle that I want to live. That's for sure. Especially now. Now I was health conscious before. Now I'm even more. But it's a nice balance now. It's not as like years ago. I was really, really into it. Now it's sort of a balance. I enjoy myself now. I've got a totally different outlook on life because it's blunt, but this thing can literally, hit me at any point. So I don't know what's going to happen in the future. I know I've got a bit of time until it gets to a point where it's really dangerous, but I'm just living my life every day. Doesn't mean I'm going out all the time and I'm going on holiday. We've been away a bit this year, but just being grateful when I wake up and being happy and appreciating every day, trying to make the most of every day. And especially when you're with people as well, being present with people. I was never fully present when I was learning trading. It's only now that I know everything and I can sort of relax a little bit. I'm very much present now when I'm out with people.
Definitely.
I don't look at my phone or anything like that. I'm there in the moment, trying to enjoy everything. And I think that's how I want to live moving forward. Even in the bull market, this here, if you look at the daily, I was trading the daily time frames in the bull market. I didn't need to be looking at the chart every day. It's I think when you're in the bull market, you want to wake up to a 10% move every single day, and it's doesn't quite work like that. And if the market's coming down, especially as an amateur, when you're first learning, you see that and you're sort of panicking and things like that. So definitely have a system now where I can go days without looking at the market, or just have a little look, put the phone down, done. That's how I want to live, and you can make plenty of money by doing that. You don't need to be at the desk every single day. You really don't.
Yeah. I think that's something all of us share in common, that, you know, you're out with someone, you're out with your family, you think that you've done a full day of work, you're like, everything's taken care of, but you still have that attraction to look at your phone. You still have that attraction to be like, let me quickly pull up and see how that trade's going, or what the price is at, or even if you've closed out, right? There's still a little curiosity there. And it may be
Yeah.
just bugging in the back of your mind. You might even need to look at your phone, but it'll come across your mind for a second like that. So like you said, being present when you're out with people, and it's not as easy, you know. You've come out the other end, having experienced that. And then I don't know, I don't want to put words in your mouth, but maybe it's because of the health related scares that you're like, look, this isn't not life. Like, trading's not life. Life is life, and I can't keep taking it for granted. I can't keep, you know, being mentally in crypto while I'm out with my wife and what, like, you know, stuff like that. But for people like myself and other people that may be listening, we're not there yet. I guarantee you that 99% of the people listening to this right now are probably not there yet. And they're wondering, like, what should I be doing? Because the thing is, we're hungry, right? Myself, we have stuff to prove still. Like, being profitable is not good enough. Having a good year is not good enough. You're like, there's more. There's more to tackle. The bull market's coming. Am I prepared enough? Have I done enough? And the thing that I think maybe, I don't know if it holds me back or it pushes me forward, maybe a little bit of both, is that I'm always thinking that someone out there is working harder than me. Someone out there is grinding. Someone out there is putting more effort. And I get that just from, you know, being an athlete. You know, I grew up playing tennis, and I used to always think that, like, you know, my father would tell me, be like, if you don't do X, Y, and Z today, well, someone else is doing it. You're better than, you know, this guy, but he's working hard every day. He's going to catch up to you, you know? And I look at markets kind of the same way. And I'm like, I want to make sure that I'm doing everything I can. And I think that that little nagging feeling may be what other people experience as well. And maybe only through success, or maybe through, unfortunately, you know, God bless, but like, health related scares that may get you out of that thing. Do you have any advice for someone who would maybe not experience either of those things, but say, like, look, calm down or try to find a different system? Is there anything you could speak on?
Yeah, I think for me, it is the health scare. That's what really changed it for me.
Right.
But when I first got into trading, I got into it for freedom. And I know it's cliche, but that's what you get into it for. You don't
Yeah,
want to do your day job. You want to come into trading, you want to make easy money. But then you come into it, you figure out that it's not easy money, and it requires a lot of work.
yeah,
And I was not prepared for the 18-hour days that I would spend for the 5 years after that, after making that decision. So those first 5 years were extremely difficult. I went from thinking it was easy, finding out it was difficult, to now thinking it's relatively easy. We just make it difficult because we think we have to do more than we need to do.
yeah.
You don't have to, like I said before, you don't have to spend all day at the charts. There is a very simple system. I'm going to show you something right now. Now, this isn't the greatest system in the world, but it's something I was showing my my group the other day. I can just find out where it is. Is it under here? I think I've lost the thing.
Is it on TradingView? Because if it's not on
No, it's
TradingView, I think you have to
actually
present a different.
got you. Okay.
Yeah, you might need to present a different screen.
Let me show you. I will instead show you on here.
Okay.
So we're not wasting precious time here.
No, don't stress about that. People are here to listen to you speak. They can wait 2 minutes.
There is, so if I show you this, for example, now we've been testing silver. It moves really well with my indicator. So we've been testing this thing, and a very simple approach to the market is to, this is why I created this. Now, I know people don't have access to something like this, but there's plenty of indicators out there that might present similar things in a different sort of way. But if you look at when we get the buy signals at the bottom here, each one of them led to an upside move. Your system can be as simple as waiting for one of these signals, entering at the close, and taking profit for, say, 2R. Each one of these would have led to around about a 2R win minimum. And it can be as simple as that. Now, they don't tend to play out very often. This one here is in July. This one's in September. So, you've got about 4 or 5 here across the year.
Yeah.
But if you've got something like this that is a high probability trade within a daily time frame, you look at the market every day or whenever you can set alerts for this. If you've got that and you know it's got, say, an 80% or 90% win rate, then you can load up more. And so this is what I was finding. Instead of, and it goes back to what I was saying before about the risk per trade. For swing trading, when I've got systems that I use 5% per trade risk on, because the win rate, and the win rate doesn't even have to be high. You can have a 50% win rate and still put 5% on, because the losses, the winners will outweigh the losses depending on how you manage the trade. Now, I have systems that can do that, very relaxed approach, and you can risk more on the trade. This was what I was sort of discovering after the bull market, after taking all them losses. I was trying to find a system that was easy, where I could size up. So instead of trading intraday and trying to capture all these little movements, risking very little, trying to aim for a 1 or 2R, I'd rather spend that time doing something else and risking more on a swing trade, basically. Mm-hmm. And I don't think that people can quite appreciate it unless you've been through or traded for quite a while and understand how markets move. For me, it was the main problem for me was never to take that loss again. I never wanted to take that big loss again. Mm-hmm. And so I wanted to create simple systems. Creating those simple systems then got me away from the charts and away from the desk and doing other things. So that led to then a healthier sort of lifestyle. I guess it depends on whether you're, I think we all love the game to a certain extent. Some do enjoy looking at the screen all day, sitting at the chart all day. Mm-hmm. Some will enjoy that. I don't particularly enjoy that anymore. And so for me, I needed to create a simpler system for that.
Right. Do you have you in the past, or do you still play crypto as like a risk cycle? Do you still do the whole like for example, this year we had that thesis, or GCR, popularized the idea that we would have an echo bubble, fancy name for whatever, a bounce after a big crash, right? And through that, we would naturally go down the risk curve. You would have your Bitcoin moves, you would have your mid cap moves, you would have your narrative based moves, and then you would go all the way down until we had pure junk. For me, I found like last year, this is a little bit of my journey, is like last year, summer 2022, when it was all said and done, when Luna was done and 3AC were done and we were at 17K. I was like, I want to strictly focus on trading here. Like the rest of the year, I'm not going to add any spot. I'm not going to do anything. I'm simply going to focus on trading. And I did very well for myself by the end of the year. But then this year, the strategy was completely different. It was like, okay, we're going to probably have a little bit of a bounce here. We're going to have risk on. Let me buy some spot. Let me play the cycle. Let me play the risk curves. And then this year absolutely blew out of the park everything I did last year with less effort. I still traded this year. I still, played the perps. I still played everything, but the gains made from actively trading with the alerts, everything like that I've done was just absolutely dwarfed by simply spot Bitcoin, spot Ethereum, spot Solana, buying the FUD, these coins that came out like Unibot and stuff like that. I won't get into it, but do you still value that and think that for an average market participant that may be the way for them to go? That may be the way for them to be like, look, if I can understand the cycles, if I can understand the cyclical nature of Bitcoin and simply focus on top signals, bottom signals, that'll outweigh ever getting into a day-to-day trading routine. Maybe
Yeah,
that's
I think for most people that would work better. But again, you still need a little bit of skill, a little bit of knowledge of markets.
yeah.
I think in terms of cycles, people say everything repeats, I guess, in the market. But I think this year, what people are saying is this year is going to be different. We're going to pump into the halving, whereas last time we didn't. We went sideways into the halving. And so people can have their own ideas of what's going to happen. But if you look at certain things like this here, for example, this was the echo bubble of 2019. This gave me a buy signal right here and went all the way up. This one, the same thing. We can call this, people saying this is the echo bubble 2023, similar to this one. A little bit different in terms of the signals. But I think there is signs that you can, or signals that you can use, indicators you can use. You can use the RSI, for example. Very basic. If you come onto the higher time frame and use the RSI, for example, and you see a divergence, okay, let's get it up. I think we had one down here. So we had one down here. We had one down here. Those type of things can give you very simple signals to get in and out of the market. Mm-hmm. So you can use that sort of approach. I think with spot Bitcoin, it's a little bit different than trading. But there's many variations of trading, like this, scalping intraday, swing trading. Then you've got positional trading. There's all these different things. I guess it depends on what your goal is. People say just buy spot and hold, but for me, I saw that in 2022. you'd have got destroyed. And I was saying this as the market was coming down. People were getting destroyed, and they were saying never below sort of 40K, never below 30K, never below 20K.
And that 28K
each one of those things
was that big one. I think everyone thought that kind of 28K region was going to hold.
Yeah, I think dollar cost averaging is good. What's that?
I said myself included, by the way, back then. I thought 28K would help back then.
Mate, I was shorting in here, I think, back in 2021. I was still doing stupid stuff, but, we can't get everything right. And I think a lot of it was luck. You can plan, map out, execute as best as you can. There's always luck on your side. It's just the nature of markets. I think when I was looking at this, for me, the reason I was shorting this was because of the MAs. This here was a deviation of that MA. And then we got the retest and short down. I shorted up 32 down in here. Oh, 32 was in here. I shorted 42 up here on this, purely based on the moving averages and structure and imbalances, which is what I tend to use. I think the problem I've got with buying spot Bitcoin and things like that is I need to see some momentum before I do that. Now, there's many ways of getting in the market. You can use the range deviation and reclaim, which is what people like TraderXO, SC use.
Yep.
That's one way of getting in, or an RSI divergence. I have no problems with trying to buy something like that. Or if you can buy a capitulations stop at very important areas in the market. They'll tend to stop at like a range where we get this consolidation, then a breakout. Capitulations tend to stop there, and then you sort of get this reversal. those areas are fine to buy. In terms of dollar cost averaging, for the sake of it, I can't do that as a
Yeah, me
trader.
neither.
Um,
No, no.
I've
It feels
got
like wasted
friends
capital.
that, yeah, well, the issue I've got, right, if we go onto a monthly chart again, the issue I've got, and I've spoke about this to one of my friends who is purely a fundamental based trader. He looks at a crypto asset, he sees if it's worth investing in, and he'll just buy it, and he'll keep buying it. No matter if it goes up or down, he doesn't look at charts or anything, he just buys it. My issue with that is you could be buying in here and then you've literally taken a huge drawdown, and it takes you months and months and months to get back into that. I like to be liquid, so I like to have cash or money available to be able to buy and get in and out of the market. Now, I'm not always going to buy the bottom. What I like to buy is something like this right here. When you see the MAs moving upwards on the monthly chart,
Yep.
expanding away, we can see here we've had a higher close on the monthly as well for the best part of 2 years. This is where I like to load in. And for the main reason being is you'll get a quicker resolution. So you're in the market quickly and you're out relatively quickly compared to this. I don't want to be putting my money into something like this. It's not going to give me a quick return. I'd rather trade with that money. Now you can split this up into various different systems. And
What you just mentioned there is exactly kind of what I used in January to add size. So I bought after FTX, like with, shitting my pants basically, because I was like, dude, if it really felt like that was the final nail in the bear market coffin for me. And we'll get into that
yeah,
later if we have time. But I added size using the exact same technique that you used there. There was a range that formed post FTX. We started flipping EMAs, and the EMAs were pointing upwards. We were holding them as support. If you come down to like the daily,
you're
you'll
talking
see
about the
that
daily.
there.
This one here, yeah.
Yeah. Yeah, right at the end there, right before we took off, it's the exact same thing you were talking about. We were starting to
Yeah.
flip them. They were aiming upwards. We're consolidating. And that was the moment where I was like, I need to add size. This is the time. And it didn't feel good. It felt risky. It felt like, oh, the natural thing that people think is I didn't buy it 15. I didn't buy it 16. Why am I going to buy it 17? I think people get in their own way and they don't understand that the market has shifted. The bulls are in control. And this is where you could use something simple like an EMA or something to help you out with that bias.
Yeah, correct. And it is very similar to what you were talking about. When you see this sort of thing, the ramping up of the EMAs, higher highs constantly on the daily.
Yeah.
Once this starts moving up, you can see the expansion as well with the daily candles. What you tend to get is after a move like this, you get a consolidation, then a second move. That's what I've found. So you'll see it here, consolidation, move up, move down, consolidate down. This one a tiny little bit there, and we move up again. This one here, same thing.
Yeah.
That's what you tend to get. So a lot of people would have sold into this, not realizing that at this point through here, if we go back onto the weekly, around about the 18th of January, and this is the difficult part of trading. So that's on the 9th of January. We got the buy signal on the weekly. Now, if you look on the daily, this is straight up.
Yeah.
Who wants to buy when the market's gone straight up?
Tough.
I do, because it's very difficult, but I do, because that's showing you the strength, momentum in this market. We're likely going to squeeze higher. And I think this is why multiple time frame analysis is important, because if you look at this candle here and you take this range, it's literally reclaimed that range. Once you get a reclaim of let's say a value area, we're likely going to visit the other side of that area, and that's exactly what we did. Very simple trading. It's very common when we see a range reclaim like this, we are going to squeeze high and take out any shorts. I'm still short within here. This was a nice move. And
I think I think one thing that people need to focus on, for the next move, for the next bull market, for the next trending market, let's just call it the next trending market, is that when we're really strong, Bitcoin does not give you an entry. You need to have systems in place to get into the market, because if you're not going to get in at the bottom, it really doesn't give you those pullbacks. And if you, like you said, on the daily, it just went straight up, right? You didn't have a daily down candle. You didn't have like a down day to get into the market there. You really had to play on lower time frames, or just be really convicted to play into that momentum. Because what people naturally do is they just wait and wait and wait. The market will give me a pullback. It'll give me a pullback. It'll give me a pullback, right? And what
Yeah.
you could see there is that when it did, it came with an extreme like fear. Like it came with USDC depegging, and the structure, to some people say that's broken, and whatever and whatnot, right? So it's tough for people to buy when it actually gave them the entry there, and on the way up when it's moving, they say I need a pullback, right? So that, for me, that's where, like, broken record now, is where the EMAs came in. As I was looking at the hourly back then, and I was saying, okay, we're still holding this. We're still holding this. If I need to add anything, I'm just watching for that. The momentum will slow down when we lose one trend, and the next one will carry us, and the next one will carry us, right? Until it came all the way down to the weekly. I don't know which one you're using here. The weekly, you said 12 and 24, right? And those caught us, right? And that's like kind of the
Yeah.
last line of defense, which we lost recently in August. But yeah, that's kind of the simple system that I use. Is kind of like, okay, if we're super strong, we're gonna start with a 15-minute, then we go to the hourly, then we lose that, we go to the 4-hour, right? And that's how I find, the strongest strength, and then waning strength until this is the last line of defense. And that's something that I use. I don't know if everyone's gonna be able to use something like that, but the point I just wanted to make was that for people that had a tough time getting into the market this year, try to develop something for yourself, for the next time the market trends, because it can really be that simple, but mentally it's very difficult. Like Motif just said, he wants to buy into that strength. Not everyone has the courage to do that. So
Yeah, and I think you'll get it's difficult because, like you say, buying high is counterintuitive, really. You want to buy low, but this is where the multiple time frame approach comes into the market, because and it's not always going to work, but I found that when you get these signals on a weekly, for example, and these are just break of structure, very simple, you are going to, majority of the time, catch some sort of trend. But again, I think everyone's different. You have to have your own sort of system that you can manage. Everyone's got different lifestyles and different ways of thinking. But definitely, I think I got this from Loma as well. Loma talked a lot about this in the bull market. When you see an all-time high break, you should be looking to buy that, not fade it, especially in a bull market like this. And I've always thought about it. It's always stayed with me. And so I think you've got fear on the downside. So when the market dumps, you've got fear, but you've also got fear on the upside. When the market moves higher, you're fearful now that you've missed out on that. But there's always ways to get in. There's always ways to get in. You need to develop a system for that. I can show you a little bit of what that might be. And it's essentially, when you see the MAs like this, there's plenty of upside in this trend. And another thing, which I'll mention, is the RSI. So I use the RSI as well. I'm not going to give too much away, but when you see the RSI going to overbought territory, it's not a sign to sell. That is strength in the market. Yep. It's a strength-based indicator, momentum. So when you see that, a lot of people want to start selling. You'll hear it all the time in this 70 level. It's time to start fading. But you can see here that the RSI hit the 70 level around about here, and then it continued to go all the way up to around about 24K. So there's plenty of juice left in this market. It's only when we start getting back out of that area through here, that's when we start seeing that rollover of price. Yeah. And again, a lot of people don't like to use. Sorry, man.
No, I was just gonna say, I agree with you there. Well, I had really strong misconceptions about RSI in the beginning as well, and thanks to CBS, because CBS uses RSI and teaches it really well, I was able to understand some of the nuances there. Because I was that guy early in 2021 as well, during the bull market, thinking, oh, it's overbought, like the meme, overbought, oversold. Oh, it's overbought, I should sell. It's oversold, I should buy. But if you use that, you were going to get, like, if you use that to buy the dip, you're going to get destroyed, right? You're going to be buying the dip for potentially months, especially in a bear market. In a bull market, you want to see that, like you said, maintaining that position of strength and being overbought. I don't know if I said overbought or oversold, but I think you guys understand what I'm saying.
Yeah, I think for the downside, it's a little bit different usually when the market goes into the oversold area, it does tend to stall and move sideways. It doesn't have as much momentum to the downside as it does to the upside. That's what I've found anyway. You can see it really when it does dip into that there. You do tend to get that move away. So I think it does work for when the market's moving lower. It's just when it moves higher.
Is that on all time frames that you've noticed that?
Not all time frames. My focus really is on the daily. The daily time frame for me is number one.
Okay.
Yeah, that's where I've mainly noticed it on that time frame. And another thing, which is something that I've not really seen many people talk about, is when you're using divergences on the RSI, you should only use the 14 period look back or whatever you've got your RSI set to. So that's 14 candles. Now, a lot of people don't consider this to be a divergence. Okay, I don't either. However, it's telling you a story. And if you think about this here, let's just move that up. So I use the closes of the candles.
Yep.
Here we have a lower high and a higher high on price. All this is telling me it's not a divergence as such, but it is a lack of momentum. So when we see here going through into the 70 level, the overbought, lots of momentum in the market. As this comes up and gets above this high, this right here cannot get back into that overbought area. And I see that as a lack of strength, lack of momentum. And especially when you get that range reclaim right here, you can comfortably short that area right there. That's something I use as well. So it's not your typical divergence like this, where everything's together.
Yeah.
We have a gap here, comes up. I still tend to use that as a sign of lack of momentum. So I know a lot of people don't really see that as divergence as such, and I don't either, but I just thought I'd mention that because it's something that I use and I found it to be pretty handy.
I get very worried or cautious when I'm bullish, when price has a long consolidation, and when it wants to expand, it doesn't give you that extension that you want. Like the April high, right? You had all that consolidation at 28K, you broke to 30, and then you immediately start retesting back to that 28K region, right? That bounce that you got.
Yeah.
Right. That to me is not bullish at all. Right. I don't know if that shows up on RSI as well, but for me, that's just like, well, I think Cred says it the best, where it's like, if you break out of a range, you do not want it retested, right? You want buyers to come in and push that momentum away from it.
You want essentially what will happen, limit orders will shift up. That's essentially what you're seeing. So an aggressive market buyers will step into the market as well. What you're seeing here as the price comes down is you'll have limits sitting here, and they will hold that price up, which means they want to continue going higher. You'll get market buyers stepping in. That's when you start seeing that push higher as well, that initiation from those buyers. But you definitely don't want to see this. Essentially, if you, for example, look here, if you have limit orders sitting here and you've got market orders hitting into them and they can't hold that price up, well, that's a sign of weakness. And that's what you're seeing here. You would expect those limit orders to step up into the market, and they've not. They've failed to hold, which means the shorts have been more aggressive here. And it's not something you really want to be seeing.
Let me switch paces real quick. Let me ask you about, for people now who you think are, like I'm getting asked this question a lot, which is, hey Doc, is now the time to learn how to trade? Is now the time in the market? Because we've had what I like to call an opportunistic market in 2023. You've had you have easy mode at certain times. We've had on-chain like easy mode, where if you just buy into the Telegram bot narrative, you probably will do okay, right? If you buy into, Pepe along some part in April, you were going to do okay. We've had decent narratives, but now I feel like a lot of that stuff's drying up and it's just cartel coins. And people who follow me are asking me, hey Doc, is now the time to focus on trading? What would you say to those people? Would you say, if you buy into maybe the time-based capitulation theory, which I tweeted about earlier today, that, maybe we do have a lull period in market for the next 6, 8, 12 months, something like that, before, that post halving hopeful bull market. Is now the right time to really buckle down and trade, you think?
I think it will be for the next sort of quarter or two. I'd recommend people basically work hard in the job and save as much as they can whilst trading, and then get ready for the bull market. In terms of the bull market, if you look at the monthly, I don't think it's going to kick off really for another. I mean, where's the halving?
I think it's April.
I think it's April. So
I think it's April.
if we mark where the halving is, if you look here, the halving back then was in May, around about there.
Yeah.
We went sideways into that halving, whilst the fast MA was above the slow MA. We don't even have that right now. So for me, it's a little bit tricky. I cannot be bullish this market right now.
Yeah.
I would rather see this go up, to be honest, and then get bullish. It sounds funny, and I'm not going to buy up here. I'd wait and then maybe buy in here. I don't think that's going to happen. I think we are going to take some of these lows out. I just can't see this low, all of these lows staying intact. I just can't see it.
Yeah,
so for me, I think this is going to come
like
lower.
That USDC depegging low, that I think it's 19.7 or something that we set back in March. Yeah, I think everyone's eyeing that one. Like, that one needs to be taken.
I think so. It makes sense. It's the low end of the range. It does kind of make sense. If we look at the outer bands as well on this, you notice here, tag the low.
Yeah.
It just looks like that's going to happen again. I'm not trying to predict or anything.
Mm-hmm.
I honestly don't really care. I want to see this. Until I see that, I'm not going to get bullish for the next bull market, essentially. I'd rather buy in here high, load in. So instead of buying here with peanuts, I'd rather load in here with an absolute shit ton of money and just hammer it. You know what I mean? And sit on my hands, let this thing play out. And that's essentially how I'm going to play it.
I have such a hard time seeing how, there's a lot of people talking about higher prices this year or higher prices pre-halving. I just can't see it. I think the market has given us every signal that it doesn't want to trade or it doesn't want to accept over 30K, right? We had the most bullish narrative that we had all year. Like, the market was going up, it was doing well off the yearly open. We had a certain bullish Bitcoin narrative in March where the banks, I think some banks defaulted. Bitcoin did well off of that, and USDC depegged, and they're like, okay, well, we can't trust stables, we can't trust banks, we could trust Bitcoin. I'm sure you remember that one. That was like a decent narrative for Bitcoin. But the best thing that we had all year was, hey, BlackRock filed an ETF, and BlackRock never gets denied, and we've been wanting a spot Bitcoin ETF forever, and spot Bitcoin ETF means passive flows from TradFi, etc. So like, that was an extremely bullish narrative, and all we did was go up there, we took out the yearly high, and we dropped back inside. That's really the market just telling you we don't want to trade up there, we're not ready for that expansion. And I think when we get that, we're just going off to the races. Like, once we start trading above 30K and accept, I think we're going. Right. But there's no indication from my end that I could see that we would do that now, because even if we got that ETF approval, for me, it just feels like, okay, we'll teleport back to 30 and we'll probably get rejected there again.
Yeah, I mean, if you take a look here, you can see that green line on the chart. It's really where the structure was lost. Similar to, I mean, this is a little bit different, but we lost it here. Okay. And when you think about the length of this, it's like 2 years.
It is, yeah.
This right here is just over a year. I can't see this either moving higher, even though if we take this, that was a 340% move. This one is only 100% move from the lows. So it's not gone up as high, and you can see that really if this was the same, it would have gone up somewhere around here. And maybe took this high out, but it's not even done that yet. I'm not ruling it out. I don't want to ever rule anything out, but as it stands, I just can't see it. We don't have the momentum of those moving averages. We didn't really have it through here, but it only took one candle to break through there, and then it flipped. Here,
can I ask, from a risk perspective, when you guys had that move, because I wasn't active in crypto back then, but when you had that quote unquote echo bubble, that
This one,
2009, yeah, that 2019 move, did you guys run the risk curve dry? Like we got up to 14K or whatever it was back then, 13, whatever it is. And then, you went down the risk curve until there was complete shenanigans. Did that happen in crypto back then where you're just like, I can't be part of this market anymore? It's too ridiculous. Because we've gotten that this year where it's just
yeah,
like the Bitcoin bid was gone and we're doing hamster racing. We're doing all this other shenanigans where you're just like, okay, all right, I see where this is. We've gone down the risk curve. There's no new money coming in. Like we need to cool off and reset.
I didn't trade this, so I only got into crypto around about here.
Okay.
I was looking at it in around about COVID, that COVID dump. This is when I got involved and started longing altcoins through late 2020.
Right.
Because Bitcoin broke out, altcoins were still at the lows, consolidating. And this is when I was loading up. Once I saw this is another sign. Bitcoin well, at least it did back then anyway. Like 2020 is when Bitcoin broke out. When you see that, I mean, just long altcoins, especially if they're still consolidating. And then you have that the fundamental backup to those altcoins. I mean, that's when you start loading in. That's when it becomes easy mode. Yeah. I just don't know if that's going to happen again. But yeah, I didn't trade this. I did trade this though, so not too sure what was going on back here. To be honest, I wouldn't have traded it well because, I mean, I traded this well, but it was a lot of luck. Everything went up. You could literally buy and hold for months. Yeah. And I remember waking up. I want it back as well. Like I really do. And people have called me a bear, especially in 2022 when I was shorting. But make no mistake about it, I want this market to go up. It was so good waking up every morning and your portfolio's up another 10%. It's a feeling that I can't describe. A lot of you guys will know about it if you've experienced it. But I really want that back. But I can't see it for another at least 2 quarters, maybe.
Yeah.
Looking at this from a monthly chart,
I think it's
really healthy. That's what you want. Yeah, it's exactly what we want.
Yeah.
Whether we get 12K, I don't know. 12K is still a level that people cannot discount. I mean, it's all the way back down here, but anything can happen in markets.
Yeah.
I'm just going to trade what I see at the time. If it comes back down here, takes this low, gets back above, that's a trigger for long-term hold. So essentially, here's my plan. I'm going to show you my plan. If it comes down here, as we spoke, this is the range low. Range, deviation, reclaim. Comes back down through the low and takes this low out. Okay, gets back above. That's where I'll start buying Bitcoin. Mm-hmm. If that happens and we consolidate, move sideways, when it breaks above here, similar to this, and we get that MA cross, I will buy the retest. I won't buy underneath. I'll wait until that retest. If I don't get a retest on the monthly, I will then start chasing it. That's essentially how I'm going to enter this market next. I'm not going to be buying any dips. I'm not going to dollar cost average in. It's just not a game I play. That's essentially what I'm going to do. It's very simple. Anyone can do it, really. It's two very simple processes. I think this right now is going to be a key level for us to reclaim. Huge level.
Yeah. I love that a lot of us can come to similar conclusions using very different techniques, right? You're talking about very, very clean price action, like very, very clean, very systematic stuff there. I'm just going to pull up my chart for a second here and kind of show what I was looking at for Bitcoin, both on the way down and the way up. And it's a little bit of like news absorption. I don't think too many people use this. I don't know who talks about this, maybe Cred. But like news absorption was like a massive factor for me, both on the downside and the upside, right? Like, cause I'm looking at these moves here and I'm going, okay, this is, well, what color is this? Boom. Okay. And I'm like looking at this and I'm like, okay, that's Luna. Yeah, of course, Luna's a top 10 by market cap coin. It has, Bitcoin exposure because I think Duquan's buying Bitcoin. So yeah, it's a lot of sell pressure. That's bad
That
for the
was
risk.
Duquan buying that them two candles there. Right? That was Duquan
Yeah, these
buying.
two.
Yeah,
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 these
I
two.
remember
Yeah,
that.
yeah, yeah.
Yeah,
And then he had to unwind all that, and there's obviously no
yeah,
bid, so it's just getting wrecked, right?
yeah,
So that's pretty disastrous. Okay, of course, right? We did a horrible, like, that move that sucked for a lot of people. Not you, of course, because you're shorting the market, but for a lot of
yeah.
people that sucked, right? This one was 3AC. I don't know why this went back to white, but yeah, this one was 3AC, right? And I would argue 3AC was much worse, much, much, much worse for the industry. This is all the creditors. Were exposed, the big contagion. Anyone who's exposed to 3AC is going under. You have all these lenders, going belly up. Terrible time in markets. Like, it didn't really feel good, and it felt like everything was blowing up. Every other day we're having another thing, right? And I'm looking at that measure moon, and I'm like, that's bad, right? That's pretty bad, but it really didn't do the damage that Luna did, in that kind of sense. And then we have FTX, and FTX. People talk about, like, people like Kobe who have been in since 2011, like real like natives to crypto who've been around for the entire lifespan go, I don't want to be in crypto anymore. They go, like, this is the first time ever that, they've been scared. They've been worried. And I look at this and I go, well, we were at 17K with 3AC. Why are we not at 12? And it was tough to buy this candle, but then we just go sideways for a bunch of weeks, and we're not going lower, and everyone's expecting this to blow up. And I'm going, that for me was that sort of news based or narrative based or fear based absorption where the market is no longer telling me that it wants to go lower, right? And I didn't capitalize on this perfectly when it happened. Of course, I bought Bitcoin, like I said, and then I used those MAs to add. But I used it really well this year in reverse for the bull market, right? Or whatever, the echo bubble, or whatever you want to call it, the trending market, where we had weekly candle closes through the range, right? And this was nothing. This was just like that yearly open move, right? I don't think we had a narrative for this, especially, like, a lot of people were fading this. We had a lot of bears looking for everything. And I think that, Donald had a super funny tweet, and he said, SFP, 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 stay fucking poor, right? I
Yeah,
love that, right? Everyone was fading every move on this, right?
yeah.
And then we had
Donald
another
nailed that. Yeah,
yeah, and then we had another consolidation, and this one was a bullish narrative, like I mentioned, right? Banks are bad, Bitcoin's good, pretty decent narrative. And then we had the best narrative of the year, like I just talked about, which just failed, right? It couldn't do anything for us, gave us no extension, 4 or 5 weeks in a row, just getting rejected here. And I was very vocally just like, guys, you're wasting your time in Bitcoin right now. Stop looking at this chart; it's done. And to me, I feel like that's something that people can use. It's a very just simple thing. Use a weekly chart or something like that, and you can look at, like, the weakening momentum to either the upside or the downside in a trending market, and just kind of cross reference that with what's kind of carrying the market at the time. And if you want to back test this, and we can LARP, I wasn't, actively using this. I had no idea of this concept back then, but you could think of the same thing about, like, oh, this was Elon buying, and this was Saylor, and this was Kathy, and we have 100K calls up here, and this was, what is it, El Salvador and Taproot and futures ETF, and you're just like, well, we shouldn't be getting stuck up here, right? If all that is that good, right? So that's just one of the things I wanted to add from a cyclical perspective, that, if you don't want to be super technical with it, and you maybe not having all those skills, maybe this is something that people can look into as well.
yeah. I like it. It's it's common sense as well, really. When you're looking at it, the only thing is, using that approach, you need some sort of invalidation. That's where TA comes in. So if you compare that with TA, then you've got quite a robust system there. I like it. I think it's it does. It's funny. It's funny how it works out pretty much all the time.
Yeah, I mean, I was looking at this. Another thing that's always a red flag for me is, I don't know how trustworthy this is. I'm talking about in a very nutshell here, because we only have, I say that I only have like 12 to wherever we at now. It's September, maybe 14 months of me being consistently profitable as a trader, being able to bring in profits every month that are worthwhile, right? So that's my experience base that I'm using this on, and it's worked well for me. And another thing that a little tidbit, is when we're down here, people are very, very, very adamant that we're going lower. It's just a consensus. It's just so many people
Yeah,
are talking about And people that weren't saying that up here, but they're saying 12K has to happen. I'm not going to buy till 12. I'm not going to buy till 14. And when you're up here, it's the exact opposite, that they're like, we have to take 32. I don't know how many you must have seen it on CT. Like the 32K liquidity.
Well,
It
that
just
was my
became
target. Well,
sorry.
32K was the area I wanted to short. So 32K was actually the area that I wanted to short. But I
Yeah.
wasn't seeing any signs that that was going to get taken. And so then you have to lower the expectations of where that market's going to go, and then look at it from like to the right there, where you've got that swing high marked. No closes through it. Why are we not closing through it? Get back below, and then
Yeah.
and down it goes.
Yeah.
So sometimes, yeah, and that's another difficult part of trading is having. And this is why now I'm like, just let the market do its thing. Don't have anything in your head of where you think price is going to go. Where it goes, let it go, and then see what happens when it gets there, and then just trade what you're seeing at the time. Because sometimes you can overthink it, and then it's sort of, you've got the fear of getting into the market then in case you've shorted it too early or bought it too early, you need to take it out. All of these things come into it, and I just don't want to be trading like that. I want to trade what the market is showing me at the time, and I think that's a good example right there. Everyone's calling for 32K. And we didn't even get it.
Yeah, it was really loud. Like a lot of people, like bears or bulls or anything, that was like 32, 32, 32. And in my experience, the way that I kind of use the game theory of markets is that majority have to be wrong. The majority have to lose. We can't all win. It doesn't work that way. Like if everyone is calling for something, I don't mean just be a contrarian. Don't be just a blind contrarian. Oh, everyone's saying this, because that's really dumb too. Because in a trending market, right, everyone's saying higher prices are coming in a trending market. Well, they're going to keep being right. It's only really at the tail end, that everyone has to be wrong. And this is something I like to say, is that everyone is wrong at the start of a trend. Everyone is right in the middle of a trend. And then everyone is wrong once again at the end of the trend. Because naturally, you get accustomed to just seeing it going up and seeing it going up. And it's just some techniques, right. And it's funny how the majority of people who are profitable navigating the cycles or the markets, we all come to these conclusions in different ways, but at the end of the day, we do come to the same conclusion. I think that's kind of beautiful about markets.
Yeah. I mean, I can't trade like narratives. I'm not good at trading narratives. It's just not my strong point. So I think if you can come up with a system where you can combine a few of these things, then I mean, that's awesome. But it's something that I'm working on as well. I am learning how to sort of trade that way, but I don't necessarily need it. But I suppose it would give me that conviction if I did understand
like it as a
more of that.
It's not a
it's like a confluence.
at all for me.
Yeah. I like the way you just described that, though. It makes a lot of sense, and you can definitely trade that way. I just feel like the TA gives you that invalidation.
Yeah.
So, for example, if I show you the lows on this one, when we were down here, your invalidation was simple through here. It's a break of structure. I love structure because it tells you, for example, this move here is where buyers stepped in, and then we had this move up. Now, for this move to be sustained, we cannot lose this level. Once you lose that level, it's over. We go sideways. This move up here, to sustain this move, we need to keep going up. We cannot come back down. It's very simple, but you've got your invalidation. Invalidation on this one could have been, for example, you got in here. If it gets through the low, then I'm probably going to cut the trade, and then you can long it comfortably. You don't have to set a hard stop. You can set a hard stop right below the lows here. If it comes back down, you can then manually exit that trade. There are many different ways of doing it, but I think TA is really good for invalidation. And something like what you've just shown there is also really good to support. Okay, what should I be looking for here? If we've got all this negative news and the market's not going any lower, what's that telling us? Maybe someone's absorbing all of this, and then we're going to go higher. So,
yeah, like I said, for me, it's definitely not a leading indicator. It's not something that I'm like hanging my hat on, but it's just something that I like to use in crypto because, the reason that I'm in crypto, I don't know about you, but I feel like it is the most opportunistic market in the world because at the end of the day, a lot of it is speculation. and we're playing the field. We're playing our opponents. And I think crypto being the most volatile, and you see so many people on social media, I'm a crypto millionaire, I'm this and I'm that. It attracts the quick money mindset kind of, market participant. It attracts the people that are trying to make money very quickly and don't look at this like a long game and don't look at systematically. And I think you can definitely use that to your advantage, and definitely use that, like, who are my opponents? Who am I playing against? Who's the market up against, right? And just take a little bit of that input in. And if it's agreeing with the chart, that's only a help, right? If it's not agreeing with the chart, it's no help. But it's always something that I like to think about, just as a supplementary thing.
Yeah, well,
First
I
and
think that
foremost, yeah, first and foremost for me was simply it was the technical thing, right? It was, hey, this is a weekly swing of the high, right? It's supply. Everyone knows the importance of the 30K region. It's an extremely important part of the chart. This is a weekly candle. We've had numerous attempts to clear this level, and we're not doing it, right? As opposed to every other time that we've had a consolidation, we've broken above it, consolidation, broken above it. This was the weakest move of the three. So I was hanging my hat more on anything else than the price action. That was first and foremost for me. But when I combined that with everything else, it gave me more and more conviction to be like, okay, I'm selling the spot Bitcoin. And I don't want to short this. I'd rather just play the risk curve, because I know what happens when Bitcoin's topped. Risk just goes wild, right? And you have opportunities. And this year it was on chain, but who knows what that's going to be in the future.
Yeah, another thing that I don't really do either is on chain stuff. It's not my strong point. I just stick to what I know.
Yeah.
And yeah, I like the way you use that sort of narrative news based absorption. It's quite similar to the thought process of using like an order flow absorption, I guess. If the market's going higher and we see people buying at the highs and it fails to continue higher, gets back within the range, then those guys are offside. It's quite similar sort of thought process. It's not something I use, but maybe it's something to look at for myself in the future.
Maybe I'm giving away too much of an edge here by talking about it too. Maybe it stops working now.
Yeah,
let's be honest,
I don't know. I think it's worked for that. It's worked
Sorry.
for that longer. I think these edges are always going to be there. This is another thing that I found with people. They'll say that the edges disappear. So I think certain edges will disappear, especially if you're running a trading bot and everyone's trading it. Over time, that will, the more people that join, the less edge you have. Whereas if you have, say, a discretionary strategy or some form of discretion involved, it comes down to execution at the end of the day. So the market can do exactly what you thought it would, but you still may fuck up the execution of that.
Yeah.
I find that very, I find it funny when people say that the edge will disappear. I think certain systems will stay there for a very long time due to the fact that a lot of people just can't execute around them. No matter where they think the market's going to go, they just can't execute properly around it. So it doesn't really matter what they think is going to happen. It's what they actually do in terms of acting upon that. So
exactly. And you can always adjust around them. I think one of the things that I noticed this year was the rise in popularity of, range trading or deviation trading. And it was really clean for me when I learned it, and I picked it up from EXO at the end of 21 and started practicing in 2022. It felt so clean because I feel like it was still, at least in crypto, under the radar, right? And they really popularized it to the point where I saw in the end of 2022 and into 2023, we would have two runs of the highs. We have a double deviation, right? And you'd run it twice or three times. Price would make you feel like it's front running that level, and they would rip through it, right? So it started becoming a lot of mind games around that, but it doesn't mean that it was gone, because the best thing that EXO teaches was how price should have it invalidations and not hard stops, right? And if you understand what price is trying to achieve, you can play into that rather than being like, oh, well, this got run, I'm out, right? If you understand price and you'd be like, oh, it should not be turning around here, we should not be stuck here, et cetera, et cetera. So there's a little bit of a feel to it. I think there is a little bit of edge decay when things get crowded, but it's nothing that a what's the word I'm looking for here? An attentive market participant can't get around.
Yeah, correct. Yeah. I think, yeah, with the range deviations, there's a lot of people using them now. But I think all of these come together as well. So, like a lot of ICT traders use very similar processes without them realizing to a lot of, your basic sort of technical analysis. It's funny how, like you said before, a lot of us will long the same level with different techniques, and short certain levels with different techniques. I think that, and it's definitely saturated now, the trading industry. There's lots of traders coming to the market now. You can see that on Twitter. They're everywhere, and especially the young kids that are coming through. I've seen 16, 17, 18-year-olds trading now.
Yeah.
I mean, I was too busy going out and doing other stuff.
I wish I got in earlier.
Yeah, I'm the same. I wish I would have got in earlier. But it's, it's great to see, but it is becoming very saturated now. Yeah. Whether that's going to change things, I don't know. I've tested systems going back over 20 years on Euro USD, for example. And from around about 2010 back towards the year 2000, it was completely different to what it is now. Now, I don't know whether that's through algorithms coming into the market, things like that. They sort of changed the dynamic of markets a little bit. Maybe we're going to see a little bit of a shift again at some point. They're always evolving, and so you've always got to sort of keep ahead of it. I think what does stand the test of time is structure, for me anyway.
Yeah, I agree.
It's the structure of the market. Where the most important thing is, where are buyers getting into the market, and then where are they potentially losing? So if you're buying up here, for example, and then it comes back down, and we see no more buying in the market from this point, well, they're not very strong, are they? They're not showing that they're being more aggressive anymore. So I think that's always going to be there. It's just, are we going to get lots of whipsawing and things? That's what we've seen recently, especially in this range here. I mean, this has been awful to trade. I've not traded it personally. I was away, but look at all the choppiness, and it's been awful. Even this, we broke out, we get back below. If we lose this area, it's that area where buyers stepped in or shorts exited, whatever it is. If we get back below here now, it's pretty much game over for them, in my opinion.
I think it's just a matter of time. I think if you're bullish, we shouldn't be trading back here already. I think we should be going
up like this. Yeah.
Yeah.
And you can see like higher highs, higher lows. Very simple. I don't think that's ever going to disappear, but the way you execute around that may change a little bit, which might have a big impact in the markets, but who knows? As I say, I just like to keep it simple these days. I'm not looking for anything too difficult. I don't need to learn everything. I just know what I know. I make money from it, and that's all that matters to me.
Yeah, man. Motif, bro, we've been speaking for an hour and a half now. And I say this anytime I talk to another trader, I feel like I can talk to other traders for hours. I feel like we could sit here and I could talk to you for 5 hours, but I don't know if I'll get anyone able to sit here and listen to us for 5 hours. So we should probably cut it there. But before I let you go, is there what I love to ask people, is there any imparting wisdom that you could leave us outside of crypto? Anything that you want to talk about? I know you're very passionate about your health and life outside of crypto. So is there anything you want to leave us with? Any advice for us?
Look after your health. I think it's the most important thing. Some things aren't avoidable, but there's a lot of things you can do to give yourself the best chance of having a healthy life. And I think it's not about living forever. It's about feeling good as you get older. You want to be mobile. You want to be healthy. Yeah. And if there's anything I can leave you with, it's just look after your health. Sleep well, eat well, move your body, go for a walk, get outside, get some sunlight. Don't sit there all day trading. You don't need to do it. Yeah. Definitely put your health before everything. Take it from me, who's really struggled this year with that, and it affects not just you, it affects everyone else around you. So definitely keep that in mind and have it at the forefront of your mind for sure. So
I hope everyone else takes that advice, but for sure I am, and I will, because I've seen it myself, man. I've seen it myself this year. I've seen the detriment that I've put on my own body just by, sacrificing almost everything for it, sacrificing a lot for trading, trying to get better, trying to milk the markets. But yeah, you don't have any longevity in life at the desk. So
it's okay when you're young. You feel like you're bulletproof when you're young.
yeah,
As you get older,
not
it
gonna work
gets
out.
difficult. Trust me, it gets difficult. It's not fun.
Yeah.
Yeah, take me back, please, to when I was
Oh, me
20.
too, dude. I'm not that young either. I don't know. My voice isn't that deep, but I'm not that young
Yeah,
either.
yeah. I mean, don't get me wrong, I love life and all that, but it's yeah, I wish I could go back and change a few things. But that's life. We get old, and yeah, just look after yourselves. That's what I'd say.
Definitely. All right, man. It was a pleasure. Thank you so much for coming on. It was a pleasure to speak with you. I hope we can do this again sometime.
We sure can.
All right.
Thanks for having me. And
Yep.
yeah,
I know
cheers.
everyone here already follows you everywhere, so I'm not even going to plug you. I know everyone's
Yeah,
following you on Twitter already. If they
yeah.
follow me and they don't follow you, I don't know what they're not doing, but I'm going to leave your Twitter in the link below, or in the description box below anyways. All right,
No
guys.
worries.
Cheers. We'll talk to you in the next one.